The rise of Trump's tariff war, reshaping global trade. Introduction. Since taking office for his second term on January 20, 2025, U.S. President Donald Trump has unleashed a series of sweeping tariffs that have sent shockwaves through the global economy. Targeting major trading partners such as China, Russia, India, Canada, Mexico, and the European Union, these tariffs mark a bold escalation in what many analysts are calling a new trade war. With tariff rates soaring, some as high as 145% on Chinese goods, and retaliatory measures from affected nations, the global trade landscape is undergoing a seismic shift. This article explores the origins, implementation, and far-reaching consequences of Trump's tariff policies, examining whether they constitute a new trade war and how they are reshaping international relations, economies, and supply chains. Drawing on recent developments, economic analyses, and global reactions, we uncover the story behind the rise of Trump's tariff war. The genesis of Trump's tariff strategy. A return to protectionism. Donald Trump's tariff policies are rooted in his America First agenda, which emphasizes protecting U.S. industries, reducing trade deficits, and reshoring manufacturing jobs. During his first term, 2017 to 2021, Trump imposed tariffs on steel, aluminum, and a wide range of Chinese goods, sparking a trade war with China that disrupted global markets. Those policies, which included tariffs on $380 billion worth of imports, set the stage for the aggressive approach seen in 2025. Trump's rhetoric during his 2024 presidential campaign further amplified his commitment to tariffs, describing them as the most beautiful word in the dictionary, and promising to use them to address perceived unfair trade practices. The second Trump administration has taken this approach to new heights, implementing tariffs that are broader in scope and higher in rate than those of his first term. The stated goals include reducing the U.S. trade deficit, protecting domestic industries, and pressuring trading partners to negotiate more favorable trade deals. However, critics argue that these policies risk reigniting inflation, disrupting supply chains, and alienating allies, potentially leading to a global recession. Key motivations. Trump's tariffs are driven by several key motivations. Economic nationalism. Trump argues that low tariffs have disadvantaged the U.S. by allowing cheap imports to undercut domestic manufacturers, leading to job losses and dependency on foreign nations. He has repeatedly claimed that countries like China and India exploit the U.S. through unfair trade practices. Trade deficit reduction. The U.S. goods trade deficit with China was $295.4 billion in 2024, the largest with any trading partner. Trump's tariffs aim to reduce this imbalance by making imports more expensive and encouraging domestic production. National security and geopolitical leverage. Tariffs have been justified under national security pretexts, such as protecting critical industries like steel, aluminum, and semiconductors. Additionally, Trump has used tariffs as a tool to pressure countries like Russia and China on geopolitical issues, such as the Ukraine conflict and fentanyl trafficking. Fentanyl crisis. Trump has linked tariffs on China, Canada, and Mexico to the flow of fentanyl and its precursors into the U.S., declaring a national emergency to justify some of these measures. The scope of Trump's tariffs in 2025. Tariffs on China. China has been the primary target of Trump's tariff war, with tariffs escalating dramatically in 2025. The average U.S. tariff on Chinese exports reached 126.5% in early May 2025, covering 100% of Chinese goods, before being reduced to 51.1% following negotiations in Geneva. Key actions include: February 4, 2025, a 10% tariff on all Chinese imports, doubled to 20% by March 4, citing China's role in the fentanyl crisis. April 2, 2025, a universal 10% baseline tariff on all U.S. imports, with China facing higher rates. April 9, 2025, tariffs on Chinese goods increased to 125%, later clarified as 145%, prompting China to retaliate with 125% tariffs on U.S. goods. May 14, 2025, a mutual agreement reduced U.S. tariffs on China to 51.1% and Chinese tariffs on U.S. goods to 32.6%, with both sides retaining a 10% baseline tariff for 90 days. These tariffs have significantly impacted U.S. importers, with one shipping vessel, the OOCL Violet, facing an estimated $417 million in new tariffs on goods loaded in China. Tariffs on Russia. Trump's tariffs on countries trading with Russia aim to pressure Moscow into a ceasefire in Ukraine. A proposed Senate bill, backed by Senator Lindsey Graham, threatens a 500% tariff on countries like China and India that purchase Russian oil and other goods. This bill, supported by 84 co-sponsors, is part of a broader strategy to weaken Russia's war economy. July 15, 2025. Trump announced a 100% secondary tariff on countries trading with Russia, giving Russia 50 days to agree to a Ukraine ceasefire. China and India, which import 85 to 90% of Russia's seaborne crude oil, are primary targets. Tariffs on India. India, labeled the tariff king by Trump due to its 12% trade-weighted average tariff, compared to the US's 2.2%, has faced increasing pressure. Key developments include: February 2025, Indian Prime Minister Narendra Modi visited the White House to negotiate tariffs, aiming to double bilateral trade to $500 billion by 2030. May 6, 2025, India proposed a 0-for-0 tariff on auto parts to kickstart negotiations. July 1, 2025, Trump indicated that the US and India were close to a trade deal, following talks to avoid the proposed 500% tariff on countries trading with Russia. Tariffs on Canada and Mexico. Canada and Mexico, key U.S. trading partners under the USMCA, have faced significant tariffs, particularly targeting their auto industries. February 1, 2025, Trump imposed 25% tariffs on Mexican and Canadian imports, citing concerns over fentanyl and illegal immigration. March 6, 2025, goods under the USMCA were temporarily exempted for a month. July 12, 2025, Trump announced a 30% tariff on imports from Mexico and the EU, starting August 1. These tariffs threaten the highly integrated North American auto supply chain, prompting lobbying from U.S. automakers like Ford and General Motors for exemptions. Tariffs on the European Union. The EU has faced escalating tariffs, with Trump initially proposing a 20% tariff on most EU goods, later reduced to 10% to allow for negotiations. April 2, 2025, a 10% baseline tariff on all imports, with higher rates for some EU countries. May 31, 2025, Trump threatened a 50% tariff on EU imports starting June 1, later delayed to July 9 after talks with EU Commission President Ursula von der Leyen. Other countries. Trump's tariffs extend beyond major trading partners. Israel, a 17% import duty was imposed on April 2, 2025, prompting Israel to offer tariff removals on U.S. goods. Vietnam and Britain, trade agreements with both nations retain double-digit tariffs, reflecting Trump's strategy of combining high tariffs with trade deals. Indonesia, a 19% tariff was announced on July 15, 2025, under a new agreement. Economic impacts of the tariffs. Impact on the U.S. economy. The economic consequences of Trump's tariffs are multifaceted, with both short-term disruptions and long-term uncertainties. Increased costs for consumers. The Tax Foundation estimates that the tariffs amount to an average tax increase of $1,300 per U.S. household in 2025. Consumer prices for goods like electronics, appliances, and clothing are expected to rise by 1.4% to 5.1%, costing households an additional $1,900 to $7,600 annually. Revenue generation. The tariffs are projected to increase federal tax revenues by $171.1 billion in 2025, 0.56% of GDP, making them the largest tax hike since 1993. However, if the International Emergency Economic Powers Act, IEEPA, tariffs are permanently enjoined, revenues would drop to $38.6 billion. Inflation and recession risks. Economists warn that the tariffs could reignite inflation and increase the risk of a U.S. recession. J.P. Morgan has raised its global recession probability to 60% by year-end 2025. Market volatility. The announcement of tariffs led to significant market swings, with the Dow Jones Industrial Average dropping 724 points after the initial tariff announcement and later surging following a 90-day pause on some tariffs. Impact on global economies. The tariffs have triggered widespread economic disruptions. Chinese freight bookings to the U.S. fell by 30 to 60% in April 2025, and Nomura warns that the trade war could cost China up to 16 million jobs. China's retaliatory tariffs and export restrictions on rare earths and critical minerals have further escalated tensions. India's reliance on the U.S. as its largest export market makes it vulnerable to reciprocal tariffs, which could reduce economic growth and increase inflation. Canada and Mexico. The tariffs threaten the North American auto industry, with potential job losses and higher prices for consumers. European Union. The EU's retaliatory tariffs affect $330 billion of U.S. exports, reducing U.S. GDP by 0.2% and 10-year revenue by $132 billion. Chile. Tariffs on copper imports could reduce employment and foreign investment in Chile's mining sector, though higher copper prices may offset some losses. Retaliatory measures. Trading partners have responded with retaliatory tariffs, escalating the trade war. China imposed 84% tariffs on U.S. goods, later raised to 125%, and restricted exports of critical minerals. EU announced retaliatory tariffs affecting $330 billion of U.S. exports but delayed implementation for 90 days to allow negotiations. India imposed retaliatory tariffs on U.S. goods in 2019 and is considering further measures in response to the 500% tariff threat. Canada and Mexico promised retaliatory measures but have engaged in negotiations to secure exemptions. Geopolitical implications. U.S.-China relations. The U.S.-China trade war is the centerpiece of Trump's tariff strategy, with significant geopolitical ramifications. Trump's initial 145% tariffs on Chinese goods were met with 125% retaliatory tariffs, leading to a mutual trade embargo. However, negotiations in Geneva in May 2025 resulted in a temporary de-escalation, with both sides agreeing to reduce tariffs and establish a mechanism for further talks. China's response has included diplomatic outreach to allies like the EU, ASEAN, and Canada to counter U.S. influence. Beijing's refusal to align with India and Australia in a united front against U.S. tariffs highlights the complexities of global alliances. Russia and secondary tariffs. Trump's proposed 500% tariffs on countries trading with Russia, including China and India, aim to isolate Moscow economically. This strategy risks alienating key partners, as both China and India are major importers of Russian oil. Russia's stock market and ruble strengthened after the tariff announcement, suggesting limited immediate impact. Impact on allies. The tariffs have strained relations with allies like Canada, Mexico, and the EU. Canada and Mexico's integration into the North American supply chain makes them particularly vulnerable, while the EU's negotiations reflect a desire to avoid a full-scale trade war. India's efforts to secure a trade deal indicate a pragmatic approach to navigating U.S. pressure. Legal and international challenges. WTO rulings. The World Trade Organization, WTO, has repeatedly ruled against U.S. tariffs. September 15, 2020, a WTO panel found that Trump's first-term tariffs on China violated global trade rules by exceeding agreed-upon rates without adequate justification. December 2022, the WTO ruled against U.S. steel and aluminum tariffs, citing no valid national security emergency. The U.S. blocked the adoption of this ruling by preventing WTO appeals court. Appointments. May 28, 2025, the U.S. Court of International Trade declared the IEEPA-based fentanyl and reciprocal tariffs illegal, though a federal circuit stay allowed them to remain in effect pending appeal. Domestic legal challenges. The use of IEEPA to justify tariffs has faced legal scrutiny. The U.S. Court of International Trade's May 2025 ruling against the IEEPA tariffs was a significant setback, though the stay by the Court of Appeals for the Federal Circuit has kept them in place. Economic and political critiques. Economic critiques. Economists warn that Trump's tariffs could have severe consequences. Inflation and price increases. The pass-through of tariff costs to consumers is evident in rising prices for appliances, electronics, and clothing. A Duke University study found that washing machine prices rose 10% after 2018 tariffs, with no long-term price stabilization. Job losses. A 2021 Oxford economics study estimated that the first Trump administration's tariffs led to 245,000 U.S. job losses. The current tariffs could exacerbate this trend, particularly in import-dependent industries. Global recession risk. The OECD downgraded its 2025 global growth forecast, citing tariffs as a major barrier to economic growth. Political critiques. Within the U.S., the tariffs have sparked division. Republican support. Trump's base and advisors like Peter Navarro and Treasury Secretary Scott Bessent view tariffs as a strategic tool for economic leverage. Opposition criticism. Senate Minority Leader Chuck Schumer and others argue that the tariffs lack strategy and risk economic chaos. Internal dissent. Elon Musk's public criticism of Navarro highlights tensions within the administration over tariff policy. Global reactions and market responses. Market volatility. The tariffs have caused significant market fluctuations. April 2025. The announcement of 145% tariffs on China led to a 724-point drop in the Dow Jones Industrial Average. A subsequent 90-day pause on most tariffs triggered a historic market rally. July 2025, global markets reacted positively to tariff reprieves, with Germany's DAX rising 5.6% and South Korea's Kospi gaining 6.6%. However, U.S. futures remained volatile. International diplomacy. Countries have adopted varied strategies. China. Beijing has combined retaliatory tariffs with diplomatic outreach to isolate the U.S. economically. India. India's negotiations reflect a balance between maintaining U.S. trade ties and resisting pressure to align against Russia. EU. The EU's delay in retaliatory tariffs and negotiations with von der Leyen indicate a preference for diplomacy over confrontation. Japan. Prime Minister Shigeru Ishiba called the tariffs a national crisis, highlighting Japan's vulnerability as a major U.S. trading partner. The broader context, a new trade war. Defining a trade war. A trade war is characterized by escalating tariffs and retaliatory measures that disrupt global trade flows. Trump's tariffs, combined with retaliatory actions from China, the EU, and others, fit this definition. The scale and scope of the tariffs, affecting major trading partners and critical industries, suggest a new trade war with broader implications than the 2018 to 2019 U.S.-China conflict. Comparison to the first Trump administration. The first Trump administration's tariffs focused primarily on China, steel, and aluminum, affecting $380 billion in imports. The 2025 tariffs are more extensive, targeting a wider range of countries and products, with higher rates, e.g., 145% on China versus 25% in 2018. The use of IEEPA and secondary tariffs on Russia's trading partners adds a geopolitical dimension absent in the first term. Long-term implications. The tariffs could reshape global trade in several ways. Deglobalization. By disrupting supply chains and encouraging reshoring, the tariffs accelerate a trend toward deglobalization, reducing reliance on global trade networks. Regional alliances. China's outreach to ASEAN and the EU suggests a shift toward regional trade blocs to counter U.S. influence. Economic realignment. Countries like Vietnam and India may benefit from trade diversion as companies seek alternatives to Chinese manufacturing. Conclusion. Trump's tariff war in 2025 represents a bold and controversial attempt to rewire the global economy. By targeting China, Russia, India, and other key players, the U.S. has sparked a new trade war with far-reaching economic and geopolitical consequences. While the tariffs aim to protect U.S. interests, reduce trade deficits, and address issues like fentanyl trafficking, they risk inflation, recession, and strained alliances. The global response, ranging from retaliatory tariffs to diplomatic negotiations, underscores the complexity of this economic conflict. As the world navigates this turbulent period, the outcome of Trump's tariff strategy will depend on the balance between economic leverage and the costs of disruption. Whether this marks the beginning of a sustained trade war or a temporary escalation remains to be seen, but its impact on global trade, prices, and international relations is undeniable.